coming up on today's show. Bonds breaking out as turmoil in Europe escalates. Can we see an even bigger rally ahead? Invesco's Christina Hooper will be here to weigh in. Plus, crude oil tumbling to its lowest level in over a month. But one of your traders says that the sell-off may have gotten so bad it could actually be good. We've got that trade for you. But let's go ahead and start with the markets reeling from events across the pond, with the Dow sinking over 400 points at its lows and falling below its 50-day moving average today for the first time since early May. Scott Nations and Brian Stutland are your traders today. They are breaking down the day's market moves. Scott, let's go ahead and start with you. It seems like the Europe story is a little bit old, 3-4 years ago. It's resurfacing here, even though it seems like things have gotten better.
They certainly have gotten better, and it seems like the ECB, the European Central Bank, really is on the case over there. I think the problem and the reason our stock market is getting torpedoed is not because it's going on, but because it is such a surprise. We really thought that things were much better over there, and the fact that Italy is having a tough time refinancing its debt indicates that maybe things are not as good as we had hoped.
Brian, what are your thoughts?
Well, I don't know if it's so much a debt issue. When you look at the Italian bonds trading at 1.75% on the near term, it's not like we were back in 2010 and 11 when we had Italian bonds, Spanish bonds, Greek bonds trading above 10% and whatnot. So I don't think it's so much a debt issue as it is the uncertainty within the government right now poses a problem that Italy may leave the EU. If they leave the EU, who's the next one to fall? Having said that, I don't believe they can do that. When you look at it, listen, Great Britain could leave it because they didn't need Germany and the rest of everybody else to go leave, right? I think Italy, in this case, needs Germany. They need the greater good of the EU to exist as they do. Otherwise, there would be hyperinflation potentially. So I think things will sort out, but it's definitely freaking the market out right now.
All right, with markets tumbling, our next guest has identified a couple of key levels that could signal whether there's more trouble ahead of us. Master of the charts, Ralph Akampora of Altera Capital Partners, joins us by phone. Ralph, always great to have you, especially on a day like today, to get some context here.
Hi, Jackie. Thanks for having me.
Talk to me about what you're seeing in the markets, the levels that we're watching at this point, and which levels are going to start to concern you.
Yes, I think we should take a look at the S&P 500 and you stare at that graph, and you'll see that the market has been in a well-defined trading range for the last 5 months. But if you stare closely at the most recent activity, you'll see that the chart is labeled the 2,700 level on the S&P 500, which right now we're below it. If we close below that, then I can safely say that, again, we witnessed another failed rally. The rally in May just didn't follow through to the upside. And I think if you look back in the last several months, you had 4 or 5 other instances where that happened. And the market doesn't like failed rallies. Okay, but if I had to zero in on a very, very important level, you'd have to look at the February and the April low in the S&P 500. Well, the February low was slightly lower. It was at 25.32. That, to me, is the floor on this market. I'll give the bulls the benefit of the doubt that we're going to continue in this trading range. But I really have to stress to everyone, you have to be stock and sector specific. There's a lot of rotation going on, and there's damage being done, and some of the leadership is losing its mystique. For example, if you look at a chart of crude, yes, I heard the commentary before about, yes, on a short-term basis, you're getting a little oversold, and it might be a nice trading rally. I have a little trend line in there, and granted it's a very short-term uptrend, but I think we did some damage on some of the, well, not some, all of the energy-related names. I'm not saying it's permanent, but the talk of Saudi increasing their oil production, I think it provides a headwind to a leadership group that has been part of the recently movement to the upside. So crude, again, be very, very stock-specific when you're looking at that. And again, this morning, the concerns at the European Union, global rates moving lower, and look at the Dow Jones Utility Index. I have a picture there. It's very, very short-term up move. As rates go down, the leadership becomes a little bit more defensive. And I'm not saying that the utility is about to take off, but we labeled the chart with a little number called 711. 711, and if the Dow utility closes above that, then I think you have a market that's really very, very defensive.
Ralph, what do you think the chances are that we enter bear market territory and quite soon?
Well, I'm not predicting it, but I'm telling you I'm watching carefully because, as I mentioned a moment ago, failed rallies is an anathema to the stock market. That's it. You're starting to see more and more churning and tops being formed in some big name stocks. And I'm fearful that if we do break down, you're going to have the beginning of what would be a major downtrend, would be a bear market. What would cause that? Well, you start losing more leadership. And today, the financials are under pressure. Again, you can relate that to rising interest rates and things like that, whatever the cause might be. But you don't want to see the XLF, for example, to make new lows. That to me would be problematic. Now, having said that, there's a group that is still holding up very well, the technology. And then it gets back to the point that I was making before. Be very, very selective. There are areas you can be in, but the key areas are starting to get fuzzy for me. And I just want to give everybody a heads up, that's all.
Okay, Scott's going to jump in.
Right, Ralph, it's Scott in Chicago, and I have a question about this trading range that you pointed out in the S&P. If we were to get back above that trading range or break out of it to the upside, given your overall cautious tone, how would you approach that? Would you just say, you know what, I'm not going to participate, I'm not going to try and catch that, or is there a way in particular you would try to participate?
Are you saying to me that the S&P goes to above its January high of 28.72? If
Well,
you're talking that way, then
trend-
I'd say, you know, all bets off. You're off to the races again. Yeah, all-time new highs, fine. There's no problem with that.
Brian's going to jump in, Ralph.
Ralph, so to reach back on some of the leadership in technology, is an area that you're looking is the FANG sector, Facebook, Apple, if you throw that into the FANG as a plus, Netflix, Google, Amazon.
Yep.
Those types of stocks have really been the leaders. Seems like if those continue to move higher and act as the leaders, we're going to get a lot of back and forth trading in the S&P and the major indexes because we may see some sectors fall off the table. But I don't know that we get a significant sell-off in the S&P if we get that big, huge leadership from technology. Do you see it that way as well?
No, I agree with that. I'm not, guys, I'm not screaming bear call here. I'm just saying heads up because you're right. You can point at technology. There aren't that many sectors that look as good as technology. So the number of sectors that are look strong, a lot less than what we had a couple of months ago.
Whoa, stop. What is going on here? Well, what you're looking at is a plummeted price of AutoZone stock in just a matter of an hour or two when it went up pre-market from 710 and fell later in the day all the way to 596. Why should you care? By utilizing a very simple option strategy, we were able to turn every $1,000 of investment from 9:30 in the morning till 10:45 a.m. into an excess of $10,000. That's right, literally a $10,000 investment produced in excess of $100,000 in gains. The crazy truth about stocks and options trading. Most of the fortunes were created when stocks fall. So if you're not utilizing this crazy strategy, you're definitely missing out on thousands of dollars and you're leaving that money on the table for somebody else. Look, these are the facts. Just think about it. Stocks drop actually much faster than it takes them to climb higher. So just take a look. There's your AZO graph right here. It took it a month, 2 months to get from this 580 level all the way to about 700. And look how fast it dropped just in one day. Now, how do we know that this had a potential to happen? Look, it has a history of doing these things at the same level at around 700. It did it last time during the earnings report. So you don't have to be a rocket science. You just got to know which stocks, when to take action, and you got to know how to find the stocks. Has it ever occurred to you that every day when the market goes higher, there's plenty of stocks that actually drop? Because if every day some stocks did not drop, then the market would go to the moon, just like Bitcoin, right? The reality of life, everything that goes up must come down. Look at the housing bubble in 2008. Bitcoin prices, when nobody believed, we put a recommendation at 18,800 to short Bitcoin. In other words, to make money when it falls. The bottom line is this: you don't need a market crash for you to actually profit on stocks falling. The opportunities are there every single day. You just got to know where to look for. If you grasp the simple idea that stocks fall much faster than they go up, you will be able to become a much more effective and efficient stock or options trader. Okay, hold on. So what you're saying is while everybody's chasing the stocks on the way higher, the real money is actually made when stocks drop. Yes, that's exactly what I'm saying. If you'd like to learn more about this fascinating and yet such a simple strategy, I invite you to go behind the scenes with me where I will reveal to you how I turned 12,000 into 466,000 in less than 7 hours trading options with this strategy. And I know this sounds crazy, but I actually did it. And I want to share with you all the specifics, all the details of how I was able to accomplish that. So if you'd like to become a better trader, take action now. Click the link on the button below. Life is too short. Don't waste another minute. Today is your day.